Hi guys, I hope everyone's doing good. In today's video, I want to chat to you guys about AMC Holdings, so ticker symbols AMC. In my last video on AMC, I mentioned that there was a possible massive short squeeze coming. So in this video, I'm going to provide more information regarding this and how I believe this is possible. Before I get into today's video, I just want to say a big massive thank you to everyone who's recently subscribed to my channel. I appreciate you guys. I appreciate all the support you're giving me on this channel. Now check this out. This video is brought to you by Webull. If you'd like to get 2 free stocks valued at $1,850, check the link in my description box below. Welcome back to Investor Prime TV. David here. If you're new, this channel is a one-stop shop for anything investment. So investment ideas, investment discussions, stock picks, when to get in the market, when to get out. So make sure you guys go ahead and subscribe, and of course hit that notification bell so you don't miss any further uploads. With that being said, let's get this bread. So a number of trading brokers such as Charles Schwab, they're increasing the margin rates. So in trading or investing on margin is effectively borrowing money from the broker. So the fact that brokers are increasing the margin rates, this means that they foresee a lot of potential extra volatility within the market. So with AMC, brokers are foreseeing there's going to be a lot more volatility within the market. So they've effectively increased the margin rates. So just like for retail investors, margin rates are also assigned to institutions. However, institutions, a lot of the trading activity is done through what's called the dark pool. So to summarize, dark pools are private exchanges where institutions can place trades, and there's a lot of trading activity for institutions, but this trading activity or these exchanges are not available to the public, and the information regarding the trading activity is only accessible by institutions. Dark pools are used by institutions for block trading. So this is where they can place a trade of maybe 1 million, 100,000 shares, etc. So large quantities of shares they can trade. Back to the topic of margin, let's say you have a $1,000 account and you have a margin of like 400%. Let's say the trade is going against you and it's gone against you to the point that you're in losses of near enough $1,000. So effectively you're in loss of almost your account balance. Then what happens is your broker can issue you a margin call. So this effectively means that they can liquidate your position immediately. So the reason they do this is so that the broker can protect themselves and protect you as well. So that way you don't end up losing 100% of your balance on a trade. You have something left over. So that's why they give a rate of, let's say, 50%. So that way if all goes south on your trade, like it goes totally against you, the most you'll ever lose in your account is 50%. So this margin call can also be issued to institutions. This margin call can be issued by the NSCC, so the National Securities Clearing Corporation. So the NSCC are able to force liquidate positions of institutions. Imagine you're an institution like Citadel that you want to short AMC, for instance. So you're shorting AMC, all is going well. So the whole dynamics of short selling is that you effectively have to borrow shares from someone else. And then you pay a premium to the share owner for as long as you're holding that share, or you're paying a premium as you're holding those shares that you borrowed, or you're selling against those shares that you borrowed. And then imagine the share price starts to rise again. You start panicking as an institutional short seller. You start panicking because the trade is going against you. As well as accumulating losses, you're also having to pay interest on the shares that you borrowed to short AMC. So imagine there's a big spike, or imagine there's a lot of diamond hands of AMC. A lot of people are holding their shares, they're buying more shares, etc. And then there's a spike in the share price of AMC. So you want to get out quickly, and some institutions actually can't get out quick enough because remember, they bought hundreds of thousands of shares or millions of shares, so they can't get out as easily as someone who bought one share. So what happens now? So they effectively have to get out share by share or thousands of shares or wherever. So this is going to take time, and as they're trying to get out or liquidate their position, they effectively are paying interest. So what happens with these clearing houses is, so if these institutions effectively reach the percentage of margin rate that they've been assigned, then clearing houses such as the NSCC have the authority to force liquidate the positions of institutions. So this is effectively what's called a margin call. So that's the broker or the clearinghouse telling you, look, it's time to get out of this trade, it's not going well. To protect myself and protect you, I need to liquidate your positions. So what happens when institutions who are short in the market start getting out of the position? They have to buy to cover. So they effectively have to buy back their shares. Alright, so when they liquidate the position, they're forced to buy back the shares. So this creates a lot more demand in AMC share price. But one way institutions get around this with possibly getting out at a profit or a small loss is that they will effectively short the stock a lot harder. So that means create more supply so that the share price plummets, so that way they can get out at a profit and effectively liquidate the positions at a much better or much ideal price in terms of short selling. And this happened to Viacom stock, so VIAC, where the share price effectively went from $100 all the way down to $46 in a couple of days. So that was institutions effectively short selling this stock, driving the price right down deliberately, so that way they can get out at a more ideal price. But what ends up happening is they end up creating the demand at a much lower price, and then the share price starts to climb up and effectively getting past where it was before. So this is where stock price makes a new high. So at some point this might be the same case for AMC, whereby institutions try to short this stock just so they can get out lower, because I believe this short squeeze is coming for AMC, and I believe a lot of institutions are going to be getting margin called on AMC because they'll be overwhelmed by the amount of diamond hands, they'll be overwhelmed by the amount of people getting behind AMC. So if we have a look at the chart of AMC Entertainment holders, so ticker symbols AMC. So from my last video, I anticipated the share price heading towards $14. However, the share price has just been falling. So this is an example of them trying to short AMC at the moment. To give a much better example, if we have a look at between January and February, what was going on with January and February. So as we can see, the share price effectively took off. So there was a short squeeze. So a lot of institutional sellers such as Citadel, they had margin calls. A lot of them had to be bailed out, okay, because they were effectively caught by surprise with this move. So what happened is, instead of getting out at a loss or admitting, you know what, we got out at a loss, to short AMC hard. So that effectively brought the share price down from $20 down to $5. So as we can see, this is roughly where the institutions were covering their shorts. So there's a very good demand base being built up and rose the share price up. However, there's still short sellers in the market and there's still a big short interest. There's still 21% short interest in AMC. So of course, short sellers are going to try and short this stock, but the share price just continues rising. If we have a look, there's an ascending triangle forming. So an ascending triangle just means that the share price is rising, all right, and there's a lot of momentum being built up. So if you picture compressing a spring, all right, and then if you let that spring go, there would effectively be a huge burst of energy. So this is the same case with this. So right now, imagine this being a spring. So right now, the share price is getting towards this tight region, all right? And then once it breaks out of this resistance, then there's going to be a burst of energy, i.e. there's going to be a huge demand, all right? And this will send the share price to the moon. And of course, with this huge demand in AMC share price, this is going to catch a lot of institutions by surprise, and then they'll have to effectively cover the shorts, or they'll be margin called. So if you enjoy the content that I put out on AMC, make sure you subscribe and of course hit that notification bell so you don't miss any further content on AMC that I put out. If you'd like to support the channel, you guys can sign up to my Patreon. The link is in the description box below. Thanks guys, I'll see you in the next video.